Good morning, welcome to another day Mark Bar brought to you by Mike Bjork. Today is Tuesday, February 24th. We got a couple economic news releases scheduled for today. We got the Case-Shiller Home Price Index for the month of December. So back in November, we had a 4.7 year-over-year growth. And in month of December, it was 4.5 year-over-year growth. So good numbers there, decent numbers. Consumer confidence took the opposite effect. We had the last reading at 103.8 back in January. Reading for forecast for February was at 99, and it came at 96.4. So a little bit disappointed with the consumer confidence. Case-Shiller was okay, not great news, but not bad. Consumer confidence is obviously much lower. Now on the docket today, the stock market's been a little for the most part up a little bit, but Nasdaq's been down a little bit, so it can be a little bit mixed. You can also say for the next 2 days, prepare for some volatility because we'll have Janet Yellen speaking, and all the investors are going to be keeping their eyes and ears close to her because they really want to get some type of clue as to when the Fed might be raising interest rates, the next start. Now today she did speak a little bit about the patience, so not to be alarmed when patience is removed. It doesn't mean that they're going to raise rates immediately afterwards or down the line, but they want to remove that because they do want to cautiously approach that when it's time. Now, what she did mention they're going to be really looking at is inflation as well as labor. She does think the labors have been slowly moving, want to see that improve a little bit further. Also, with inflation as low, she does see near term it could drop a little bit further, but over long term will gradually rise upwards to the 2% level where they would like to see it at. So most likely they won't raise rates until they see some type of the inflation, until we see some improvement in inflation, of course, with the Labor Department try to spur job growth as well. So watch for those. So that data going forward will probably be a little bit more important as we go forward, as to see give us more inclination as to the Fed maybe having a little bit more comfort level about raising rates in the near future or not. As right today, we are up about 1 basis point, so we're basically at nil. So we're basically no change in terms of pricing for the better. As we yesterday we did have a little bit of improvement. So we basically from yesterday we were at again about 1 basis point. So there's really no change in interest rates today, which is could be a good thing, especially with the stock market up a bit. That we're not pulling backwards. As you can see, we did hit the 101 level. So I think we may have seen our floor here, and we may see gradually some improvements in the interest rates going forward as we've hit that about 3 times, which is kind of creating our floor of support, which could lead to a little higher bounces upwards to help us garner some more momentum for improvement in the interest rates. So hopefully we're right, and we'll go moving forward. Hey, also, I don't know if you guys heard, but reverse mortgage is going to be going through some changes coming. It was supposed to be actually due in March, but they are not ready yet for it, and they're going to be moving it forward in the next 30 to 60 days afterwards, extending it. Primarily, the changes will be due to income qualification as well as credit qualification. So this is kind of a big change here. Now, here's what they're looking at for credit. They're looking at the willingness to pay. They want to make sure that people are paying, they're not having liens or judgments or these type of things. It's not going to directly disqualify them because they're going to look at whole different things over their whole overall profile and see if they're good credit risk, but they want to make sure that people are willing because they don't want obviously issues where somebody gets reverse mortgage and they're not paying the property taxes and then having the government come in and foreclose upon the property. Those will be issues down the line. And then also with the income is basically residual income. They want to make sure that people have the money to pay their property taxes, their housing expenses, their different various expenses on a monthly basis. So they want to make sure that there's at least a positive in terms of what they call residual income. So those are things that they're going to be looking going forward. So if you are looking to buy or looking to refinance into reverse mortgages, please keep those in mind going forward, as they will be coming here very soon, reverse mortgages. So thanks again, everybody. I hope you guys have a wonderful day. Thanks for watching, and we'll look forward to seeing you guys tomorrow. Take care.